I'm Isaac Barco from Woolpack Mortgages. We're going to have a look at mortgage in principle. So, as a mortgage broker, I know all about it. So, let's get to it. Securing a decision in principle, sometimes called an agreement in principle, is often the very first step towards home ownership. It's the point where a lender gives you an indication of how much they'd be willing to lend based on your financial profile. But success at this stage isn't just about filling in a form. It's about preparation, accuracy, and timing. So I'll walk you through some of the essential steps in the process. Some starting with obviously the most important foundation, which is your credit score. So before you even begin the mortgage process, it's vital to make sure your credit score is in the best shape possible. So lenders use your credit history to assess how reliable you're likely to be when repaying a mortgage. So in simple terms, the stronger your credit profile, the less risky you appear, and the more likely you are to be approved. So that's why your credit score matters. So a high score reassures lenders that you manage your money responsibly. A poor score can lead to rejection or limit the deals available to you. So what is it that makes up your credit rating? So it's built from a wide range of data, including recent credit applications. So too many in a short period of time can lower your score. Outstanding debt, so how much you already owe across loans, cards, or overdrafts. The types of credit products you've used and how you've managed them. Your payment history, so whether you consistently pay bills and debts on time. Of course, credit checks. So when it comes to credit checks, there are two types, hard and soft. So when you apply for a decision in principle, the lender will run a credit check. Type depends on the lender, it can vary each lender. So a soft check leaves no visible footprint on your file. Only you can see it and it won't affect your score. A hard check leaves a record that other lenders can see. One or two are usually fine, but multiple checks in a short space of time can raise red flags. So in terms of the credit reference agencies in the UK, there's three main providers. You've got Experian, TransUnion, and Equifax. Every lender will use at least one of these when assessing your application. The good news is you can check your own file with each of them without affecting your score. And what I recommend is just using Check My File. It's the UK's most detailed credit report, pulling data from all three agencies in one place. That means you can spot errors, correct outdated information, see exactly how lenders might view you. So I've got a link for Check My File in the video description. So have a look at that before applying. So there are ways you can boost your score before you apply. So as you ensure you pay your bills on time, as even small missed payments can damage your record. Avoid unnecessary credit applications. Space them out to reduce the impact of hard searches. Reduce your existing debt, so loan balances on cards or overdrafts improves your affordability profile. And check your file for mistakes, so incorrect addresses or outdated accounts can drag your score down. Do register for the electoral roll. The lenders use this to confirm your identity and address. So accuracy is very important when you submit an application. If your details don't match up, the lender may reject your decision in principle. You then need to reapply, which can trigger another credit check. And each additional check leaves you another footprint, potentially lowering your score and making future applications harder. So that's why it's also important to time your application. So don't rush and apply too early. Your circumstances can change, your income, your outgoings, and even your credit profile. If too much time passes between your decision in principle and your actual mortgage application, information may no longer be valid. So that's why it's best to apply for a decision in principle when you're genuinely ready to move forward with a property purchase. This way, your decision in principle reflects your current financial situation and gives you a realistic picture of what you can borrow. So in terms of some key takeaways, strong credit score improves your approval chances and mortgage options. Too many recent applications or hard checks can harm your profile. UK lenders use experience, Equifax, TransUnion, or a combination of them all. You can boost your score by paying bills on time, cutting debt, avoiding unnecessary credit, fixing errors, and registering to vote. Do be accurate when you apply. Mistakes can lead to rejection, and apply only when you're ready. So your dip reflects your true circumstances, decision in principle. So that's it for this guide. So before you apply, do check my file, get the link down below. And with that, we have mortgage in principle overcome.